Hello and welcome. You're watching News 9 Live. We at News 9 have kicked off our pre-budget programming in this very special series that we're calling Budget 2024 Blueprint for the Big Leap. Now, Budget 2024 will be outlining India's economic priorities and also reflecting on Modi administration's goals and addressing current challenges as far as India is concerned. The economic agenda in the Union Budget is expected to include reforms to achieve Viksit Bharat status by 2047. The key expectations will include substantial investments in infrastructure, healthcare, education, along with measures to stimulate job creation and entrepreneurial growth in India. Now, citizens and businesses are also looking for tax relief, green incentives and reforms. Among various facets of the economic policy that will be scrutinized and will be under spotlight would be indirect taxation, which is a critical area for the government. Now, indirect taxation, notably the goods and service tax, customs duties and excise duties, play a pivotal role in economic policy scrutiny. Joining us on the show to talk about what are the big expectations from the budget as far as indirect taxes is concerned is Anita Rastogi from Waterhouse. Also with us is Shivam Mehta. He's the executive partner at Laxmikumaran Sridharan. And also with me is my colleague Kartik Malhotra here in the studio for a change. Hi, good afternoon. Let me quickly get in Shivam Mehta into this conversation. Shivam, what are your big expectations from indirect taxes? Now, we were going through some of the mathematics that goes behind every penny that comes into government's coffers. 63 paisa out of every rupee that comes in the form of either direct taxes or indirect taxes. While expectations are very high on direct taxes, what are you hoping the government will do as far as tweaking in indirect taxes is concerned?
Okay, so first of all, good afternoon, everyone. So I think after that last GST Council meeting which happened, which was 53 GST Council meeting where we had a show also with you, there was an expectation that there was a discussion also that they will bring certain changes with regard to the amnesty scheme. When I say amnesty scheme, this is a fairly new law. So the entire nation, when it came on 1st July 2017, the entire nation was confused about various legal provisions, rate of taxes, etc. So what government in the last council meeting has said that they are going to bring an amnesty scheme wherein for the first 3 years, that is 2017, 18, 18, 19 and 19, 20, whatever are the cases wherein there is no fraud, etc., there will be no interest, no penalty. You simply come and pay taxes and be done with it. So that is something which is yet to be notified by the government. And I think that will be the first thing which the entire industry will be looking forward to, considering that it's going to be a big relief, considering the fact that the rate of interest we are talking is 18% and equal amount of penalty. So in rather than 73, it is 10% of the value of taxes, but still 18% interest for first 3 years will be equal. More, some cases are even in more than the tax amount itself. So that's something which I think people are looking forward to. Okay. Considering the fact that there is a huge GST collection now, government is definitely in the position to issue such schemes, and industry is looking forward to that.
All right, but is that an expectation from the budget, or should one will have to wait for the 54th GST Council meeting to hear anything on amnesty?
No, I think as per the law requirement, what they require is to amend the section, which can happen, which should happen in the budget itself.
All right. Let's also get in Anita into this conversation. Anita from PwC. Thank you very much for taking time out, ma'am. Your quick expectations from what is to come as far as indirect taxes is concerned. We discussed GST. How about other components? Customs duty, excise duty. What are your hopes?
No, I do believe that if we look at the trend of the government, it seemed at least last time that they are in a mode of ensuring there's ease of doing business, little bit of relaxation as well for the corporates, and especially with the duty component and the GST collections being good, it is expected that the government should not be too aggressive only in looking at tax revenue augmentation. So if I really look at from a custom standpoint, I do believe that there can be plethora of areas where they should be able to streamline the processes under the law so that people don't have many challenges. The recent challenge which a lot of these importers are facing is regarding foreign trade agreements. The imports which are happening in FTA, there are certain duty benefits which one gets. But then there is also a concept of country of origin certificate which one needs to get in order to get the beneficial customs duty rate. This has been a lot of challenges across India, and we believe and we hope that the government should put all of this at rest to ensure that there is a clear law which states that if a benefit has to be achieved, it should be such which the companies can actually execute. It should not be something which is too difficult for them to do. That's one. Second is, I would also like to say that, because Make in India, etc., is going to happen, so we do believe there may be some rate changes which might happen in the customs regime in order to augment the Make in India, manufacturing in India concept. I would also like to touch upon GST, which is one of my favorite subject, even though you didn't ask me, but I want to say a couple of points if you're okay with that. Is
Absolutely.
that, okay, is that, with regard to input tax credit, which is the benefit which all the companies should be getting, which essentially is the tax paid on procurements should not be a burden on the companies. There are a lot of restrictions under GST. When the GST law was introduced, it was said that we will have seamless flow of input tax credit, which essentially means that the organizations or the corporates will not be burdened by the tax on procurement. It will be passed through for them. Now, we wish and hope that in the law, if they can make an amendment, that most of the business expenses should be allowed as input tax credit. And I think that is very, very fundamental need of the hour today, because in income tax also, you get business expenses as deductions. So it's going to be a common flavor then. And also the time and effort which the government is spending on actually scrutinizing each and every assessee's tax returns to see that whether credit is correctly taken or not is quite futile in my mind. Rather, just allow them the seamless benefit and focus in other areas of tax administration. That's one more point. And the last point I want to say is that we have this concept of advanced rulings under the GST, and different states are giving different advanced rulings. There was a proposal at one point of time that let's have a centralized appellate authority, because we are seeing that state A may say yes and state B may say no for a particular same transaction on GST applicability. So we should have an appellate authority there as well. It is already there in the mind of the government. They should bring in amendments in the act and the rules in order to ensure that this happens. Anyways, we know the GST tribunal will be formed. This should also be formed.
All right.
This is just.
All right, Anita, absolutely. Kartik, we've been discussing GST throughout the year, and one of the big focus areas of the GST was how there was a GST notice every third day, primarily on online gaming industry, which was crippling under it. Yeah. But all in all, conversations around the need for that appellate body as far as GST is concerned. Now, we covered the 53rd GST Council meeting, but there are still teething issues with GST so far along.
You're right, Shweta, and I think, which is why GST is become such a complex issue now. The idea was to simplify taxes, and now you've actually created a very, very complex GST framework. But, fortunately or unfortunately, in any case, the budget is not really going to do much in terms of the GST rates and GST rationalization, because that is something which will be left for the next GST Council meeting and perhaps for many more to follow. So I think this entire idea of simplification and rationalization of GST slabs is not something that we are likely to see in the budget speech, right? The fringe elements around GST, like the appellate tribunal, like notifying the amnesty scheme, etc., those are issues that may come up. But, I think if we were to take a step back or a few steps back and take a macro view of what the government really wants to do, what the government really wants to achieve, you started the show by mentioning Viksit Bharat. Now, for Viksit Bharat ambition, and in any case, it's difficult to describe development, sitting on a show. But I'm seeing even at a broad level understanding of India becoming a developed nation, in the next 24, 25 years by 2047, one has to ensure that there is going to be growth with jobs. Just a ticking growth rate of 8%, over 8% is not going to cut it, because India is a large country and the GDP growth has to reflect in per capita GDP. So I think one thing is very clear, that it is incumbent on the government to create jobs. Now, where are these jobs going to get created could eventually lead us to understand what is the kind of rate rationalization that could be expected. So to my understanding, manufacturing is a big focus for this government right now. You want to move the informal agri sector into formal manufacturing jobs that
Right.
do not require the kind of education and the kind of skills, and those skills you can train people upon. So within manufacturing, what are the focus areas? These focus areas right now, as I see it, are obviously in the realm of clean energy. We want to assemble our own solar panels here. We want to transition to electric vehicles for which lithium-ion batteries are going to be required. You want to continue producing more and more smartphones in India, but right now the duty on components of smartphones that we import, the duty on lithium-ion batteries that we import, these are duties, indirect duties, which end up hampering the industry and making these components more expensive when the end user buys them.
Right.
So I think if we were to be able to narrow focus on the government's manufacturing priorities and then look at what are the tax incentives that need to be given to the manufacturing sector on the basis of indirect taxes, we should find some answers. So smartphones, I believe we will see some concession on components, your camera modules, your circuit boards, etc. that get imported. Because, I mean, just a number here, India's total duties on smartphone imports, the components that go into smartphones, stand at anything between 15 to 22%. For the same components, Vietnam and China offered 0 to 0.5% duties. Right. So obviously it becomes more expensive for Indian manufacturers to import those components in
India. So the big question then therefore arises is, does government at this point have the runway to cut down taxes?
I think this is the year that the government has a runway with the RBI's dividend of 2.1 lakh crore rupees at Bonanza and the indirect income which the government is going to get by inclusion in the bond indices. If not this year, then when?
All right, Anita, are we expecting anything big by the way of customs duty? We know that one of the principal concerns for a lot of manufacturers in India is the expense at which they have to get raw material and components into India. My colleague just pointed out as to how, when compared to other South Asian countries, customs duty on a lot of raw material and raw products is very high in India as compared to Vietnam and other growing economies. Is there room for cuts in custom duty, the import of custom duty on raw material? And at the same time, should the government be now looking at increasing customs duty on export of finished products?
So I completely agree with your colleague that this is the right time for the government to look at reduction of customs duty on raw materials, specifically because of the competition which is happening within the nearby countries. That is one. And secondly, it's just going to help you increase your manufacturing and finally increase the sales of the final products, which then will be exported or consumed within India. I think this is absolutely the right time, and I think they should do it. That is one. Second, your question is that should they increase the export duty? I don't think they should increase the export duty because most of the products really are not charged to the export duty, right? But then from a customs duty import perspective for using as raw materials, definitely right time. In many areas they should be doing it because then it actually marries with the theme of Make in India as well.
All right, it does augur with the theme of Make in India as well. Shivam, I want to get you into this conversation, around custom duties. As we rightly discussed, there is some room at least this time around, but it's also a very fractured mandate at the center. Any tinkering of that duty would also mean that government's total indirect tax collection for the year will come down. Now, if you compare the indirect tax collection last year in financial year 2023 versus 24, it's likely to come down to 45 to 55%, 45 for indirect, 55 for direct. So basically the share of indirect taxes is now going down year on year. Do you think this would be the right time to cut down customs duty?
See, I think what your colleague mentioned, you also started with Viksit Bharat. Definitely, domestic industry need a support in the form of lower duties on raw material, higher duties on finished products so that people shift to Indian manufacturing rather than import. That's a need of an hour. At the same time, when we are talking about overall indirect tax collection, it is going down. But if you look at the recent numbers, which is from October 23 till March 24 or May 24, the collection of GST has gone up tremendously. And the reason is many. One of them is most of the products are getting covered under GST or most of the goods and the services are now under the tax lid. So say for example, construction of roads when it is done for NHAI, etc. Earlier, there was no tax at all in the service tax regime I'm talking about. In GST, they are charging 18% GST on it. So if you are bringing everything and anything under the sun to GST, then you should also encourage domestic industries, manufacturing industries by reducing the custom duties on parts, make it subject to actual user condition, that if it is used in manufacturing in India, it will be a lower rate of duty on the parts. Increase the duty, or I will say have a higher rates on the finished products when they are imported, so that these domestic industries are able to get more customer base and eventually more employment. That's what the focus of the government is. And this is definitely going to be interesting how this budget they tinker with the custom duties to encourage various industries, which he is talking about. Mobile industry is one. EV is also looking at lot of relief from the government. That we have to definitely. That's another topic altogether, though. We are talking about green environment there, but definitely EV is also looking for that. So any change in custom duty will be a welcome move for domestic industry.
Shweta, to your previous question, before you move on, about the total pie and the split of the pie between direct and indirect taxes, getting skewed in favor of direct taxes. To my mind, in fact, it is an opportune time for that also to happen, because more direct tax collection would possibly come from more number of people paying taxes, which would come from more of India's citizens being
More
in a formal
class.
employment,
Right.
bracket. So overall, I think if the government is able to this time around add that real thrust, not incentives by way of PLI schemes, etc. I mean, I'm sure some tweaking will happen to those schemes as well. But if you keep that aside and just by purely looking at taxes on key components that go into key manufacturing industries where you want to create employment, then you're looking at employment generation, and by way of that, more direct taxes being paid. So overall,
So it's not a bad thing.
It's not a bad thing at all.
Okay.
And talking about GST collection also, I mean, we've again come back to levels of about 1.71 lakh crore rupees per month or so, compared to, let's say, the March collection, which stood at almost 2.1 lakh crore rupees. So overall, we have now come to realize that perhaps we are not growing our GST collections even at the rate of inflation, or just about at the rate of inflation, which again is a worrying trend that perhaps there isn't as much consumption in the economy at inflated prices as there was about a year back. So maybe the government needs to relook at that entire consumption story, and a fillip to that consumption story can also be given only through formal job creation in the economy.
All right, makes sense. Anita, to what my colleague just pointed out, the fact that GST collections have sort of found a median at about 1.7 lakh crore, is that a worrying trend to you? And, there are also conversations on when will liquor and when will electricity and when will fuel be brought under GST. Do you see that happening maybe this time around?
So, well, I think just today morning I heard from somewhere that fuel will not be, that is not in their agenda in this budget as much as we would want it to happen, and I hope it does happen, but it doesn't seem to be the case. From a GST collection perspective, see, March is always a month where you're going to have a lot of GST collection because of assessments getting over, financial year closing, so on and so forth. So March is never really a right month to compare about the GST collections. As far as median is concerned, even if it's a median, I don't think it's a problem at all. I think a lot of corporates have been paying taxes in the right manner. And I think there was a rise of the GST collections also because of a lot of DGI investigations which happened. And many times people just paid it to close the litigation and they really didn't want to fight the litigation, etc. So I think the medium rate is a good rate. We have to look at easing of the business for the corporates. That's very, very important. At the end of the day, they are the ones who will drive the economy in the manner of making production as well as providing services, so that we augment our economy and our level of living, so that people are going to then pay more income tax as well. So all of them is actually linked, if you really ask me. So reduction of the basic customs duty is very important for the for the importation. Easing of doing business is very, very important for the government. They should not be much bothered about whether GST collections have dropped a bit, etc. Rather, they should ensure that there's huge amount of manufacturing within India, which happens and helps in boosting the Make in India scheme.
All right, let's move a little bit away from GST. I want to get Shivam back into this conversation. Shivam, one of the important aspects of indirect taxation is also customs duty. Now, there's been a thrust towards affordable housing, which seemed to have lost some momentum in the past couple of years. With the segment shrinking in a manner, government would want to retain a large part of its population that votes for it, which is underprivileged people who need affordable housing. Could you see a tinkering in stamp duty in this budget?
So I don't think so. This budget you will have much on stamp duty. Uh, Rather for affordable housing, what I think government should really think of is in real estate the major inputs are cement and steel, and so far as GST is concerned, they are both taxed at higher rate. That is 28%. Tax rate on cement as well as steel is 28. When I come to affordable housing, there is no ITC which is available. Though there is a lower rate of tax, but no ITC
Okay.
is available. That increases the cost to the end customers. If we can have some midway, either in the form of ITC available or lower tax rate on cement and steel, that can really augment the sale because that may result into cut down on prices. And to the point which I think Kartik and what Anita was also discussing on, I feel though March, April, we have seen good numbers, May we have seen good numbers. After the budget, I was in the big start of the show, I was talking about amnesty scheme. Once the scheme is introduced, the scheme has a deadline till March 25. So if you really look at from the period from starting from let's say August 24 to March 25, there'll be a lot of revenue inflow to the government because many industries who are just contesting the matter for interest may go ahead and pay the taxes for the first 3 years. So that can also result into increase in tax revenue in the form of GST, which should actually give, kind of support to the government to give maximum relief which they can in this year's
Okay.
budget.
All right.
Once the
Maximum.
amnesty scheme is there, I have good coffers. I have a reason I can stabilize my economy and I have funds. So it should go back to the economy in the form of lower rate of taxes or solution to the inverted rate structures, etc. I think that's something which we have to look forward.
All right. A lot of expectations, of course. This would be the first full budget of the Modi government 3.0. Anita, Shivam, thank you very much for taking time out. And to Kartik as well, thank you for joining us here. We are discussing Modi government's budget, the first budget of this government, which is expected on 23rd of July. And what are the expectations as far as individual tax is concerned and indirect taxes in this case? There is an expectation of GST rationalization, some announcement with regards to amnesty, which is a major part of indirect taxes, some tweaking of customs duty, and perhaps some announcement that could bring cheers for people looking to buy one of those affordable housing. And that is, in a way, sums up what indirect taxes is all about. We'll be getting you all those details and all those facets of Budget 2024 right here on Newsline Live. Thank you very much for watching.